A report from the Epoch Times has suggested that a bank run in China has taken place. This isn't the first time this has happened in China and certainly won't be the last. What is most important about this report is that it doesn't even matter if the underlying issue is valid. The banks don't have enough money to give everyone their deposits back. They literally took everything from you and have no intention on ever giving people all of their money back. You came here for the truth, so let me unveil that for you today. We are going to talk specifically about China. I want to talk about their financial system and what's happening right now. Let's begin by taking a look at this article. Bank run in southwestern Chinese city could signal a broader financial crisis. Remember what I said in the introduction, and we'll talk about it right in here. Shareholders of this particular bank, they absconded with 40 billion yuan, that's nearly $6 billion, through loans issued to shell companies that they had created. The loans were long overdue, resulting in huge losses for the bank. Even if this issue isn't real, if there never was this shell company business happening and huge losses weren't happening either, if people are pulling their money out of the bank, that's all that's important to understand. Remember, because of fractional reserve banking, these banks have barely any money in order to give people all their deposits back. In fact, in most places, if you want to take out as little as $3,000, maybe $5,000, a lot of time, they tell you, I'm sorry, we can't give it to you. And this is a problem for a lot of people who maybe they need to do some work and they needed cash to pay for this and that. They had some issue that right away they needed cash. They go to the bank, they try to get the cash, and they say, you know what, you're supposed to give us a 2-day warning on that. This is the kind of business that people are dealing with today. It's your money. Where is it? Why don't you have it? That's supposed to be yours, but of course, it's not. The news spread quickly. Even though the post was deleted within 20 minutes by internet censors, scores of bank customers rushed to dozens of bank branches in this particular city to retrieve their deposits, while long lines of people could be seen in the photos in this particular scene. I'll show you that picture in just a second. All right, now this isn't the first time this has happened in China. It's definitely not the first time it's happened globally, I'll tell you that much. We're going to look further down into here. Soon after this branch of the national bank regulator, China Banking Regulatory Commission sent out an emergency notice seeking to calm customers. The notice indicated that this bank was founded in 2001. It's got 32 branches in a city of 1.2 million people. Everything's running smoothly. They said that they've arrested the person who was spreading the rumors and so on. My whole point is, look what can happen. This could happen to any bank. Yes, this is not a huge bank. That's for sure. It's not a JP Morgan. But think about it. If it can happen to a small bank, couldn't it spill out into the bigger institutions? Couldn't this ignite something much larger? Of course it could. And that's my whole point of this. Look at the pictures here. You can see queues, lines. People are waiting. I don't know what this is. Maybe it's something totally false. But anybody who can read the symbols on here in the bottom right corner, maybe there's some details there that I don't understand. Regardless, we're looking at this out of a report. That's the claim, and I'm just bringing it to you. This here was back in 2017. In sign of financial stress, gossips cause a rare bank run in China. Right, again, spreading rumors. So we don't know what's true, what's false, but I think it's important that people do know what could be happening. And the point of the matter is that this could be something, or it might not be something, but if people are pulling their money out regardless, that tells us that we have to be worried. 1 in 10 of China's banks flunked central bank's first risk rating test. 1 in 10, all right? I'm sure it's a lot worse than that. Anyway, they point out here more than 400 of the nation's firms deemed extremely risky. 2 businesses received the central bank's highest ranking. It gets into the details in this Bloomberg article, but the point I'm trying to make here is that they run these tests in order to make it look much better than it actually is. So this year, it's got to be even worse. The entire financial system right now is so unbelievably weak. We've seen that. We've seen them reducing the quality of, with all the loans they've been giving out and everything, and I have more to talk about that in just a sec. China's central bank has lowered the level of cash that lenders must hold as reserves for the 4th time this year in its latest effort to support stable credit growth and shore up the economy. The reserve requirement ratio, RRR, was reduced by 1%, according to the PBOC. And think about this. They are constantly, I've been showing you every time they do this, they've been relaxing the lending standards again and again and again. And what's going to happen? Eventually, it's going to snap. You can't tell me that things are more regulated and more secure and everything is just fine. The only way that you see that is if you got your blinders on. Open your eyes, take your sunglasses off, because you're not seeing the whole picture. They also get into the issues. Part of the liquidity unleashed, worth around 450 billion yuan, was used to pay back the medium-term lending facility, while other 750 billion would be pumped into the market. They're trying everything that they can in order to push this up. There's all different types of avenues that they can take, and they're actually pretty much doing them all. Some economists say that the PBOC's RRR cuts may have reached the limits of their effectiveness, and big tax cuts may be more effective at boosting growth. This is, of course, not what they'll do right away, although they said they were going to, help out the individuals with tax cuts and so on. But it ultimately seems that they want the central banks to act no different than what we see with the ECB, no different than the Fed and so on. Lowering the RRR is good, but it doesn't cure all illness. All right, that's a very, very clear message that the PBOC is putting out. And to me, this is obviously going to be presented with an issue down the road. The financial system runs off of the most ridiculous concept of fractional reserve banking. It is a fraud from day one. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, you're supporting this channel. So I do appreciate that very much. And last but not least, if you want the financial education you were not taught in school, well then, these 2 books have it all. You can actually flip through them at the link below, and you'll get to learn everything, the foundation, the asset classes. I talk about a lot of the US and China relationship in here, a lot to cover. And check the link out if you're interested. But if you'd prefer the audiobook version, you can get that at themoneygps.com.